everybody.
Sean and Kelly here, the Price and Price Group of eXp Realty with this week's market report. And what are we talking about today?
Today we're going to talk about the third step of the buyer's process.
Awesome. All right, here we go. Okay, so here we go.
Yeah, so a couple of key things we want to hit on a home search is where you're searching,
Yes,
right? So
yes.
obviously you're on Zillow.
Obviously, yeah.
All the time.
Everybody's on Zillow.
And that's great. There's no reason not to be on Zillow. I mean, it's really addictive. It's fantastic. We all love looking inside those houses late at night in the wee hours when we can't sleep. But maybe that's just me. There is a reason why these searches are not where you want to get your actual information. So a lot of that is going to be how often they update.
Yeah.
Right? So go into that for us.
So you'll look on Zillow. So a couple things on Zillow is that number one, the update time. When you look on the actual Zillow profile for the properties, you'll see where it says last updated. Mm-hmm. Sometimes they can be 12 hours, 24 hours, 48 hours.
Depending on when you're looking.
Yeah, depending on when you're looking. So a lot of times the information on Zillow can be outdated. The property could actually already be under contract, or it may not show up on Zillow until it's already been on the market 24 to 48 hours, which means that there have been people out there probably bidding on it at that point.
I mean, countless times we get phone calls for people who want to see properties that they saw on Zillow, and we're having to show them, no, I'm sorry, it's already under contract.
Yep.
And they're like, what? I just saw it today, or I just saw it an hour ago, and it was active, and it went under contract 2 days ago.
Yep.
Maybe not that long, but
and we're not knocking Zillow because we are actually partners with Zillow. We work with them a lot, but there are some issues with that. Another thing about Zillow is their information can be inaccurate sometimes, because what happens is when you put property into the multiple listing service as an agent, then Zillow comes in and they scrape it. And so they pull that information and put it into their template. So
certain information they don't get.
Yeah, like sometimes condo fees don't show up. Sometimes the data will be in different fields, so it might not show bathrooms. There's different things that can be wrong with that property.
The biggest part of that, though, I think, especially with the lending experience I had, is the condo fees, right?
Yeah, that's huge.
So you might think, like an HOA fee, which can be nominal. Condo fee, not usually. That's a deal breaker.
500
I mean,
and above,
you can have a $285,000 condo, but the condo fee is over $1,000 a month.
Yep.
That means you can't qualify for that a lot of times.
And a lot of times that info doesn't transfer over because Zillow lists everything as HOA fees, and these are listed as condo fees.
Yeah, that's true.
Yeah, and the status can sometimes be different. But one of the big things about Zillow is if you're going to use it, again, we have no issue with this, but if you're going to use it, the Zestimate is a ballpark kind of guesstimate on what a home value is. Don't look at a Zestimate and then go in thinking you're going to get that price for a property. It could be too high or too low. and Zillow knows this, because Zillow was buying houses, and they were buying these houses based on Zestimate values, and they no longer buy houses because that was not a profitable model for them. So it's a good guideline, but it's not.
And Zillow's an awesome company.
Yeah,
I mean, right?
Yeah.
There's no faulting them for trying that, and then quickly pivoting and realizing, no.
And this is the same for Redfin. This is the same for Realtor.com. Whatever search engine you're using. Outside of
Zillow is our favorite outside of ours.
So the one that we recommend, and the one that we're going to set you up for in your searches is
Real Scout. Okay, Real Scout is really incredible. It's just as user friendly, I think, as Zillow. It's pretty. It's fun to look at, which is a lot prettier than the multiple listing service.
Yes,
but they update how often?
They update every 30 minutes, and it's direct from the multiple listing service. You can only access Real Scout with the permission of and an invite from a realtor.
Right.
So we have direct link into the multiple listing service. So all the information is accurate. Yeah. Again, it's much prettier to look at. It's much easier to kind of translate through all the information.
It will have all the information
as well.
Yep. It'll show you if something's coming soon. It'll be very, very clear. It'll show you if it's pending and all that. I love Real Scout. I also love Zillow, so do both.
Well,
right?
That's exactly it. So that's the next point is we don't want you to stop doing what you're doing because what if you have a parameter set up on your Zillow that we don't have set up in Real Scout and you miss a house? So what you're going to do is you're going to compare the two, and if you see properties popping up in your Zillow search, you need to let us know so that we can adjust your parameters in Real Scout to make sure everything is in there.
And let's explain why that might happen.
Yes.
In our experience, that has happened not because we're not setting your search up based on the criteria we've discussed. It's quite often going to happen because you, in the back of your mind, you've decided to start playing with a little of some properties outside of your criteria. And we've heard we didn't want to bug you with that. We weren't sure if we wanted to look in this area. And all of that. So please bug us. It's not a big deal. We want to make sure we're giving you the search that you want to see too,
make
right?
sure you're seeing everything.
Now, if you're looking like way outside of like, I know I have a search set up where I'm looking at like the $34 million house. It's certainly on my budget. I'm not going to ask my agent to set that up, but I'll have my own private little search on that.
I'll take you. There you go. All right. So the home search is important. We're going to set you up on your Real Scout search, and we're going to make sure that works for you. Next is
on the topics of the criteria that we set up.
Yes.
We do have to have a hierarchy of what's important, right? So you have to have the must-haves, the absolute, right? If you have a huge family, there's a minimum number of bedrooms that you have to have.
And bathrooms.
And bathrooms. I know with us, with 4 kids, when they all lived at home, it was like a minimum of 3 bedrooms, and one of them better be big so we can put the boys together.
That's right.
Bathrooms was, I'm like, can I have 5 bathrooms? But that's huge. If you have maybe a work vehicle that is larger, that has to be accommodated on the property, that's going to be important. Do you need to make sure you have a big garage, or does the HOA need to make sure that you can have that on your property? So that's huge.
So those are your must-haves.
That's going to be a must-have.
We have to have those. And then we want to have what your like-to-haves are, okay? But in between the must-haves and the like-to-haves, the next most important thing, so we have must-haves, second most important is deal breakers. So if it is outside of a certain school zone.
Yes, sir.
Yes.
That's a deal breaker.
Which, as realtors, we can't necessarily advise you on what schools and so on and so forth, because schools would be changed. But we can
send you to greatschools.org.
Yes, we can.
For all kinds of school information.
That's right.
And remind you that boundaries can change.
Yes. Yep. There you go.
Those are our disclaimers on schools, but that would be a deal breaker.
Yeah, school zones, or amount of parking.
The size of your lot is probably not a deal breaker, but the parking, especially if your kids are getting to the ages like some of ours are, it's like, oh my gosh, how many cars are we going to have to be able to accommodate? That would be a deal breaker.
So deal breakers,
or kick the kid out, right?
Deal breakers. And deal breakers vary per person. So for example, our house, we love our house, but you know what? Our garage is just that much too short to hold our car.
Now to hold mine, so I get the garage spot. My deal breaker was a gas stove. I had to have a gas stove. If it couldn't accommodate that, no, it's not for me.
So we need to know.
I would rather have a one less. I was going to say bathroom, but I would say bedroom. Than an electric stove.
So we need to know your must-haves and your deal breakers, and then everything in between there. So everybody's looking for that unicorn. So whenever I ask a buyer, what do you want? I'm going to go ahead and put this out there. They describe exactly what they want, and then they say, and I want to get a deal. And it's like, okay, you and every other buyer in the market. So you have to be realistic about what the market can bear. And you have to be realistic about how competitive it's going to be. And then once we have these must-haves and these deal breakers, then the rest of it's flexible. So when we walk into a house, you might have to be creative. You might hate the color pink and the house is painted pink. Well, you know what? You can paint the house.
I can help you all day long with the inside of your house, a little bit with the outside. I can't help you on size, and I cannot help you on location.
That's right. Those are the absolutes.
So the size and location would be a deal breaker. Hey, I really wanted a finished basement and this is unfinished. That shouldn't be a deal breaker. You can work with that, and that'll help you get that deal. Talking about the deal breaker, we're talking to the people in our area. Consider where you live.
Absolutely.
On how realistic a deal breaker is. We kind of pyshaw the idea of getting a deal, a bargain in our area, because that's just our area, and that's where we are.
At the time of the shooting, you got to be flexible on that.
At the time of this
broadcast. Okay, so we have established your criteria. We have established your search setup mechanism. So next is we're going to go out and we're going to view some properties.
Yay! This is so much fun, right?
Yes.
We'll go before work. We'll go after work. We'll go during work.
So we're going to set up convenient showings for you and the seller because we have to coordinate with the seller. So any properties that you do want to see, we need to be able to coordinate that with the seller as well. We do have to attend the showings with you. So we need to have all of those schedules line up. So we need the time for that.
That's true. And keep in mind, if your agent sometimes, not available during that time, it's not them. Usually your agent is going to be available anytime for you because that's what we do. The seller, sometimes they work from home. They don't allow showings during the workday or during certain days. Also, some of them don't allow overlapping showings, right? So if it's a hot property, especially new on the market, which is most often these days, they not allowing overlapping showings, it's going to be really, really booked. It's like getting a reservation for dinner at a really nice restaurant. So keep that in mind.
Yep, that's a good point too. And within this market, you're welcome, Kelly. You are the expert. Okay, so
that's an inside joke with one of our friends, one of our wonderful best friends.
Yep. One of the things you need to keep in mind when you see a property that you like is, especially in the market at the time of the showing or shooting, you have to get in there quickly because things are moving very, very quickly.
And I know it's hard when you've got your work and your life, and especially holiday season, it can be really, really hard. But if it's a house that you just have a good feeling about, you need to really try to make it on a lunch break or have, a doctor's appointment that came up.
Yep, get that.
I would.
All right. So we're going to get these showings. Now, assuming we have the time or assuming you see multiple properties that you'd like to see. Not
that we have the time. We always have the time.
I said you have the time, didn't I?
No, you said assuming we have the time.
Oh, assuming you have the time. So assuming that the schedule can work out
like
for everybody. Assuming the schedule will work out for everybody, then what we want to do is, in an ideal situation, is we want to try to cluster book showings so that you have a chance to kind of compare properties and contrast.
What's that mean, you ask?
It means scheduling them back to back.
Exactly.
Yeah. So
put it all in one cluster.
Yeah. If we need to go out and see one hot property, at a time, that's fine. But ideally, like if we can take a Saturday and take a couple hours, we'll go out and we'll schedule properties kind of back to back so you can comparison shop and see what's out there. But the key to that is you don't want to see more than 4 properties because once you go above that, they all start blending together. And
even those of you who say, no, I'll keep them straight. I'm going to take notes and pictures and all that. They start like, oh man, I don't even remember what that one was. Can we go back and see it?
Yeah,
and
exactly.
So 4 really is ideal.
Yeah, so we try to keep it at 4 properties at a time. And when we go out and see them, we usually schedule between 15 and 30 minutes, depending on what is allowed.
And the size of the property. If you're seeing a condo, you can do that 15 to 20 minutes.
Yeah. Yep.
If you're seeing a larger home, then you do need 30 minutes.
Yep. So we will do that, and we'll go look at these properties. And one of the common questions that we get, especially from first-time home buyers or people that haven't bought in quite some time, is they'll ask, well, we've looked at like 3 properties and we haven't found one we like. We feel really bad for taking your time. How many properties does it take for somebody to typically buy? And the answer for that is, in this current market, we have buyers that'll find their second property, they'll win on their first opportunity. So it might take them 2, but on average, it takes 12 and a half showings for you to find the property and get under contract. So have that expectation. So that if we're doing 4 a day, expect that we're going to be out for, 2 to 3 to 4 days looking at properties.
Now, I'm sure you're the one, you've probably run the numbers on this, but it feels to me like if they haven't found one that they at least wanted to offer on or do offer on in about 6, then we need to have a conversation about criteria and the must-haves, right? Isn't it kind of like you're actually under contract in that 12 and a half?
Yeah.
But they're making offers a lot sooner than that, right?
Yeah, so it's kind of a case-by-case basis. But between 6 and 10 offers, if you haven't found a property that was at least worth offering on, or if you've found a couple properties and you've offered, but your offers haven't been competitive enough, then we'll usually have a conversation about, okay, what are your expectations in the market? What are the criteria we can adjust? Is this the right market for you to be searching in? Because we want you to be successful as well. And if you're out there just looking at properties all day and spinning your wheels, we want to respect your time and help you do this as efficiently as possible and hit your goals.
Yeah, that's a really nice way too of saying we also have to respect the time of our other clients too.
Yeah, absolutely.
And be able to be open for the ones, there are people, if you're enjoying the process a lot and it's more of a fun time, which I totally get, and that's great. But a lot of times there are other clients who really need to get that
in.
done.
Yeah.
So we have to take that into consideration as well.
Okay, so that's where we are. So we are going to get your criteria. We are going to set up your searches. We are going to go start looking at properties, no more than 4 in a given day. Probably going to take us, 2, 3, 4 outings to find that property. And then next, once we've done that, the next step, which will be our next video, will be
writing offers and getting under contract.
All right, and that's our ultimate
part.
goal. All right, so let's dive into this week's numbers and graphs. A couple things I want to note before we dive into this is, as of the recording of these statistics, it is December 13th, it's 2023, and we are in a window, I think, of opportunity for buyers. Interest rates have started coming down. We're starting to see buyer activity pick up and tick up a little bit. You're going to see on the graph that it looks like buyer activity is going down, but that's just that's an adjustment, okay? It's not what's actually happening in the market with regards to properties that have been sitting or now selling. So things are starting to come off the market again. Interest rates have come down over the last 3 weeks, and they're expected to continue coming down. So once we get out of this holiday season and the buyers that have been sitting on the sidelines see these interest rates dip down into the 6s, which we're at 7.03 right now, see those rates dip down into the 6s, the buyers are going to start coming back in the market. Inventory is still painfully low, so we're going to see a lot of chaos begin at the beginning of the year. A lot of multi-offer situations, a lot of competition. So what does that mean for you as a buyer? It means that right now you have an opportunity to get into a property and potentially actually get some contingencies. You're going to have to pay market value, maybe a little bit above, but you're not going to have to pay 5-10% above because of all the competition. So it's a small window right now for you to be able to do that. So if you are considering purchasing a home anytime in the next 90 days, I would highly recommend that you at least explore the idea of going ahead and doing that now, sometime in the next 3 weeks. If we can find you a house, go ahead and get you under contract, because your interest rate might be a little higher than what it would be in 90 days, but the savings of buying now versus buying in 90 days when you have to fight against all the other buyers, the savings will be substantial. Anyway, so I highly recommend that you take advantage of the market where it is right now. All right, let's dive into the numbers so I can kind of show you what's going on. And here we go. All right, so buyer activity. Buyer activity, is, as always, is our orange line, and then inventory is our blue line. You can see in the last 7 days, buyer activity did dip. This is the holiday dip. We are basically in the week before Christmas, so I expect the next 2 to 3 weeks to be rather slow on buyer activity. Everybody's going to be traveling, holiday parties, and so on. So buyer activity has kind of dipped. Inventory has gone up a little bit, which that's a little bit surprising, but inventory has gone up just a little bit. So if you look over here in buyer's market versus seller's market, we did go down a little bit into a buyer's market. Being in that dip of the buyer's market again does not mean that you're going to be able to get discounts on properties or that prices are coming down. What it does mean is that there's less demand right now versus the inventory. So it's an opportunity again for buyers. So what we kind of expect to see is this is probably going to hover here over the next 3 weeks, kind of probably look like this did over the next 3 weeks or so. But if you look back at January of 2023, this is what happened. So this was beginning of December. Week 4 is beginning of January. So you can see December kind of came down in buyer activity and then it kind of flatlined, just like what we're kind of expecting to happen here. Inventory was a lot lower then, but then when January hit, we saw inventory start trickling up and we saw buyer activity just skyrocket. That was with the interest rates still increasing. This year, interest rates are coming down, so I really expect to see this number go up at a much steeper level than this. So buyers, you've got a window, 3 weeks, do everything you can right now because the competition is going to start at the beginning of January. All right, if you have any questions or if you'd like to talk to us about what your options are in your personal situation, be more than happy to jump on a call with you and look and see what we might be able to do for you. All right, please be safe out there. If we don't see you, enjoy the holidays and let us know if we can do anything for you. All right.
Hey, everybody. Now for one of my very favorite parts.
Yes.
We have Tatiana Viva Lopez from Prosperity Home Mortgage to talk to us about what's going on with the interest rates and a great, one of my favorite topics
Yes.
to talk about with a lender. So,
Yes.
hi, Tatiana.
Hello, how are you guys?
We are
Good.
good. Thank you
Yeah,
for the
it's my
question
favorite
today.
topic too today. So let's
Oh,
let's
good.
get to it. I'm gonna share my beautiful PowerPoint presentation today,
Yay.
and the rates are doing pretty good. So as you probably know already, the Fed left interest rates unchanged.
Yep.
At their final meeting of 2023. And they also signaled us that the 2024 could bring significant rate cuts. So the decision leaves rates unchanged for the prime rate. And the Powell said that inflation has eased over the past year. Hikes are not the base case anymore, as it was 60, 90 days ago. So, and following that statement, and as you know, the prime rates, the mortgage rates are not following prime rates, but the comments are very important. And the following this statement, mortgage rates actually fell on Wednesday, and now they fell from 7.09% to 6.82. Right here we can see, or 89 on 30-year fixed, and FHA is 6.7. VA is also around the same, maybe actually even lower than FHA. And if people want to buy some rates down, they could get FHA or VA rates in fives.
Wow.
Actually.
It's so
Yeah.
good to see those numbers again.
Yeah, it is. Okay, and I have a question for you. Sean got a question from a potential buyer today, and here it was. And I want to hear how you would respond so that we aren't the only ones.
Mhm.
He said, well, I think I'm going to wait until the rates are back in the fours.
Yes. Yeah.
Did he mention how many years he's gonna wait for it?
Well, so the conversation was, they said, yeah, we locked in at 3.25. We've seen a couple of houses we really like, but we just can't make sense of leaving until it hits like 4 or 4.25. And so my response was, unless there's some other national catastrophe, we're likely not to see the fours again. But that's kind of what their mindset is now. But so do you agree with that? We're not moving back towards the fours again by the end of 2024, correct?
No, I absolutely agree with that. And all the financial institutions, they predict that rates will drop they're going to be around 6%. So nobody's talking about 4.
Yeah.
And it's very complex. The economy is very complex thing, and we can just predict. We don't know, of course, what's gonna happen, but waiting for 4% could take years.
Yep.
We might not ever see it in our lifetime, and
right.
missing out on housing appreciation. That's one thing that we were talking about last time.
Yeah, and if they do get to the fours, but if that does happen to happen, then they're going to pay more than that difference in interest just by overpaying for the house, because the competition is going to be so crazy. So
exactly. So
Yeah.
just buy now and refinance later. If you can afford buying now with this rate, just buy now and refinance later.
Yeah, that's right.
Yeah,
That's right.
that's
Well,
all.
good. Glad we were on the right track with our answer. Okay, so anything else on interest rates?
No, that's about it. So basically, one thing to remember: when inflation is going down, the rates are going down, and it's logical. Inflation is when prices are going up. That's why the rates are going up. If
Yeah.
inflation is going down, the rates are going to go down.
Okay.
Okay.
All right. Well, hopefully we just keep on moving in that direction.
Yeah.
So holidays. Oh yeah, go ahead.
I do want to talk about the holidays, but real quick, there is this handy dandy bit of information that you send me. I see from you so often, and I can never get the numbers straight. It's for every how many thousands a change in the sales or in the loan amount is how much added or taken away in your payment per month?
Yeah,
Oh,
it's about like
it's
every
not something that the
10,000
expert.
is about $60.
I'll
Every
say that again, I'm
10,000 is
sorry.
about $60 per month.
Okay, okay,
Or 1,000 is $6, 10,000 is $60,
okay.
100,000 is 600.
So that's a good rule of thumb to use as we're doing the
Okay.
calculation. Okay, okay,
Thank
gotcha.
you.
Yeah.
Yeah.
I have to be the expert.
I know you do. Okay, yes, holiday time, and you have all kinds of really amazing advice for your borrowers on what
Not
to do when in the holiday spirit, right?
Exactly. Yeah, we have our favorite do's and don'ts. Don't get carried away, right? So
That's right. I
so
bought my wife a car.
Yeah.
I know. But people need to understand that what we look at when we qualify someone for mortgage. We look
Okay.
at these three pieces of puzzle. We have credit, income, and assets.
Mhm.
If you don't have one, we don't have a mortgage. One out
Okay.
of three is gone. We cannot do the mortgage. So it's important to understand that. And yeah, with holidays especially, it's important. So the credit, like this credit, dues. We always ask to keep the balances below 10% of the limit. So that's important part for credit cards. If your limit is $10,000, keep it below the balance, keep the balance below 10% of the limit.
Okay.
Of course, make payments on time,
Yeah.
and keep accounts in good standing. Those are, basic things that help to keep good credit score. And also, when we qualify someone, we look at their we don't look at their balances as much as we look at their monthly payments. So, but the higher the balance, higher the monthly payment, and lower
Okay.
price range you might be able to get into. So don't get more than 10% of the balance, and don't get carried away and apply or open a bunch of credit cards, because the inquiries will lower the credit score. And actually the credit cards, new credit could lower the credit score as well. Don't be late on payments, especially when you have a lot of credit cards. It's difficult to remember, and
Yeah.
it's easy to forget. It's good to put them on maybe automated payments, but definitely, if you have a lot of credit cards, make like a Excel spreadsheet and put them in there so you remember to make those payments.
Yeah.
Yeah, and even if you only set the automatic payments during the whole loan process, like let's say you're not sure. I know with our income, it fluctuates. So I don't have auto payments because I pay a percentage of whatever the income is, right? If we make a lot more, then I pay a lot more off. But I know when we were going through our loan process and buying this house, I set the automatic payments. I set it for like, I think we did a little bit above the minimum what it would be, but just so that if life happened and everything got crazy, that was not going to be a problem.
That's right.
Yeah, it's a good idea.
Yeah. So one of the confusion topics that a lot of borrowers have is they think when they get your pre-approval, when they apply for the loan, and you run all their credit and you do everything and they make the offer and they're under contract. I ran into situations, and tell me if you do, where they think that's it.
Like they're qualified.
That they're qualified and they've got the loan, and then they feel like they're in the clear to go and buy the wife the car, or
Buy
not
furniture.
that he did not do that.
Go buy
But do all these
furniture.
things.
Yeah.
But tell us why that is not how it is.
Yeah, because we do pull credit once every 4 months, so it's good for 4 months. However, we do soft monitoring, so we check if there are new inquiries or new cards open or new credit car loans. We actually also see if there's significant change in the balance. If there was a credit card with small balance and now it has $20,000 balance on it, we will get that notification and we will ask for new payment, and
Okay.
that could potentially disqualify someone for whatever price range they're looking for. It's important not to do any of that while applying for a mortgage. Once they're settled, once they have the house, they can do whatever they want. We don't monitor them anymore.
Yeah.
But during the process, it's important not to co-sign for anyone.
Yeah.
One common misunderstanding is that if I co-sign for someone, because I'm just a co-signer and I'm not going to be making payments, we're not going to count the payment against them. But it's actually incorrect, because for us to not to count those payments, we need to see 12 months of payment history made by another person. So if you just co-sign for someone and it hasn't been 12 months, we would have to count that payment against.
Right.
Wow.
You have to calculate that worst case scenario.
Exactly.
Okay.
And so I know you specifically have been incredible for our buyers, even in quick turnarounds. So you've pre-approved them, you've done the POFA, the pre-offer full approval. And we've had some instances where you have given us a 2-week turnaround to settlement, right?
Yeah.
And the time they're under contract to settlement. So Tatiana, will you still do the soft pull even in that short amount of time, the 2 weeks?
It's constant.
Okay.
It's constant from the beginning until the end.
Because you have to
Okay.
monitor up until settlement, you have to monitor what your risk is and make sure that nothing is happening on that credit, on that file.
Exactly. And I did have situations when settlement is tomorrow and I get notification at 9 o'clock the day before that somebody opened 2 credit cards. They went to TJ Maxx, 10% off, woohoo. Because it's holiday season. And
Yeah.
then we would have to deal with that and potentially delay the settlement. So we don't want that to happen.
Yeah.
But I can't say that maybe buying a couch would be a deal breaker. So I just want people to understand that it's the best practices to talk to the lender and ask them before doing something.
Yeah.
May I co-sign? May I apply for someone? And maybe their debt to income ratio is so low that we have a room for them to get additional debt and be okay. So don't assume that it's like, don't do it at all. You just talk to
Just
the
have
lender,
that
but definitely don't be late on your payments. That's for sure.
So a great strategy moving forward is you buy a house every year, you buy it at Christmas so that your lender can enforce a Christmas gift budget. So then you don't have to.
I think this is a weird mind stretch for Sean. This is why I handle our finances.
It all works. It all works. So explain why closing an account is bad. Doesn't that like show that you're freeing up more credit?
Well, because closing accounts actually may lower the credit score.
Yeah.
That's why we don't recommend doing that before you buy a house.
And does it lower the credit score because let's say you have a pool of let's say $100,000 in available credit, and you've got $10,000 out there, but then you close a credit card that had $30,000 credit on it, and now all of a sudden your credit ratio went from 10% up to almost 30%. Is that how that would affect the credit score on that?
That's one of the examples. It could lower it for different reasons, including this one, or maybe because this account was the oldest account and all others are new, and now you close this account of 10 years and everything else is 2 years old or 3 months old, and now you have a brand new history, and that will lower your credit score.
Okay.
There's different factors that play a role in the credit scoring. That's why it's just better not to do any of this, anything without consulting with the lender.
Got it. Okay, that makes sense.
Yeah.
Yep.
So
All
this
right.
is credit. Do you want me to talk about income and assets as well?
Yeah.
Okay. Okay. So let's talk about income. Keep working the same hours or more. That's for, if you're on a hourly salary and maybe you're making money overtime, just keep on working the same or more. We want to make sure that there's no decline in income, or if we're counting overtime income and all of a sudden you stop working overtime, then
Yeah.
you'd have to recalculate the income and it will be lower. So that's keep working the same or more. If there are any changes to income or employment, like you were hourly and now you are base salary, or vice versa, or you were on W-2 and now you're 1099, just make sure you notify the lender. If you work for this company that may be outsourcing you you have contracts with, I don't know, Voice of America, and but you work for XYZ company and now you're actually getting transferred to work for Voice of America and being their employee. So that is change in employment, even though maybe you don't really feel any difference because you're in the same office, the same boss and everything, but it's different employer. We need to know about that. If someone goes to maybe active duty or going on maternity leave, because that pay could change, or being laid off or furloughed, hopefully not for a while, but if any of that happens, notify the lender. And for don'ts, again, don't change jobs, profession, or type of income without talking to the lender first. Sometimes changing jobs is a good thing, and types of income too, but you just want to make sure that it's okay before you do it, not after.
And go
I
ahead.
have a question. You can go first.
Well, I was just going to say that I know we're talking about this during the holiday season, but these rules apply across the board, like year round. So everything that we're saying, put that in the context of if you're buying a house in the summer or any time. So I just wanted to make that clarification. So,
So my question, I heard something this morning on WTOP. That's not a plug, even though I listen to them every morning. But they were saying that some larger companies, I hope I get this right, they're now giving a long notice to people that they're going to lay off. And I think they specifically mentioned Spotify, who apparently did a ton of layoffs, and they gave their employees up to 5 months notice for them to start finding other employment, So this was seen as a show of goodwill and helping and all this, like you're going to lose your job, but hey, we're going to give you this much notice for you to find a new one. Have you had that come up? How would you deal with that? Would if that were me and you were my loan officer and I'm under contract and I'm gonna settle in 2 weeks and I just got this notification from my boss today, is that something I need to come and tell you?
Absolutely. And that would potentially be a problem, because the way the process works, when we start initially working on application on approval, we do verification of employment, right? And then we do the same again right before the settlement. Within about 10 days of the settlement, we have to verify. And what we ask for is if there's possibility of continuance of work for at least 3 years. We always look for 3 years. So if we find out that even in 5 months they're gonna get laid off, that is a problem. We cannot use that income. So the person needs to find another job, and it's possible that we can use the new job even before they start. it all depends on the program and the situation, but there is a possibility of that if they find another job real fast and they start working there, maybe after the settlement, but it could be okay depending
Yeah.
on circumstances.
Okay.
So,
Okay.
but us finding out that they're gonna be out in less than 3 years, it is a problem.
Yeah, and you would find out anyway when you ran the VOE again, right before the verification of employment, right before settlement, whether they told you or not, right?
Exactly, but sooner we know, the better.
Yeah.
Exactly.
Okay.
Okay,
Makes
Yeah.
sense.
all right.
Okay, so the last one, assets.
Okay.
So for assets, that's also for holiday season, right?
Yes.
Keep positive balance, please. Don't have insufficient funds in your account,
Yeah,
because it's a big red flag for underwriting. They don't like to see that, and I understand why, because if they verify your assets and they see that your balance goes to negative, the legitimate question is how is it gonna be when you have a mortgage?
yeah,
Yeah.
Are you
Yeah.
gonna be running low on money all the time? So, and sometimes people maybe have checking and savings account, and they move money from checking to savings, so they know that they have enough money, but still it's not good to have negative balances or
Okay.
insufficient funds in there. So just stay away from that. Always notify the lender if you're planning on receiving gifts, or maybe you want to liquidate your stocks or retirement accounts, or make any transfers, big transfers, because we do look for that and we question that. I don't know why I have this last bullet point. Never mind that. I think it's carried over from income. Don't pay
Oh,
attention to that one. La la la.
Yeah.
well, let
Here.
me ask you about the gifts and
Uh-huh.
transfers. Is that only a certain dollar amount? Or like if my dad's gonna gift me $2,500 for Christmas, I don't need to let you know that, right? Is there a certain amount that I have to let you know?
It depends on the program, and it
Okay,
depends on your income. So for
okay,
some programs, even $300 is we have to source it.
Wow.
For some, 50% of your gross monthly income or 25% of your gross monthly income. So
okay,
it all depends. That's why it's better to check with the mortgage consultant before
okay,
getting any of this,
okay,
deposited to your account. Yeah, so and don't obviously don't transfer money back and forth because it's difficult for us to document. Don't make large deposits. Don't deposit cash. This is a big one because cash is not going to be acceptable source of assets, because it's really, there's no way to document it, so we're not going to be able to use it. And I don't, the second bullet point is, and I'm kind of all over the place, I apologize, but the second bullet point is don't move money and close accounts. So what I mean by this is sometimes clients move money, open brand new account, move money from the old account and close that old account.
Ah.
So that could be potential problem, because when you close the account, you might not be able to get statements from us. So
Mhm.
we'll see the new account with a bunch of money transferred from somewhere, but we don't know from where, and you can't really give us documents because that account is closed and is not there anymore.
Got it. Okay.
So if you want to move the money, move it, but keep that account open.
Got it.
Just until after settlement, right? And then they can.
And after that, you're free bird, you do whatever you want.
I have a question on the deposit for cash. There are some out there who may do some work on the side, say, I don't know, refinishing furniture or something, and they sell it on Marketplace and make some substantial side money on it, like, maybe $3,000 a month, and that's either cash or Venmo, right? Or a Zelle transfer from just random people. how do borrowers need to account for that so it doesn't just look like creepy, questionable cash?
Also, when it's Venmo or Zelle, it's not really cash, right? It's somebody sent the money and it's documentable. And if that person, that's their livelihood and that's the income, self-employed income that we are counting, it's easy to document. I would stay away from receiving cash from clients.
Okay.
And just tell them Zelle me or Venmo,
Yeah.
or PayPal, whatever. That will be easier. But still, before doing any of that, check with the consultant to see what the best way to do
How to
it.
deal with that.
Okay.
Okay. All
Makes
right.
sense.
Good.
All right.
Next, was
And
there another?
that's it.
That's it. Okay, that's a lot to keep in mind.
I know.
So basically, the answer is talk to your lender. Don't do anything and just talk to your lender.
Yeah.
Make sure, as you referenced, your mortgage consultant, but use that consultancy function in this process so that they know they're not making any mistakes that could cost them the mortgage.
I
Right.
agree.
Yep.
Yeah.
All
Once
right.
approved, just, what do you say, toe the line?
Total.
What does that mean? Where did that come
I have no idea.
from? Do you know where toe the line comes from?
Mm.
I don't either. Okay, I'm gonna have to learn.
Look it up.
Okay, if anybody knows that, I'm sure they do. Write it in there. How did they write it in?
They write in our comments that they have it on this thing. I don't know. At Tatiana. All right. So I hate to cut this short. I've got to head out for an appointment. So do we have anything else that we're?
I think that's it. Merry Christmas, Happy
Yes.
Holidays.
We'll see you next week. We're gonna do.
Oh, we'll see you next week. Yeah.
Yeah.
That's when it's
Okay.
Yeah.
That's when we'll have chaos in the house behind us. It's gonna be great.
Yeah. Your mom's gonna.
awesome.
Have a good week.
All right. We'll see you
You
later.
too. Bye
All right.
again.
Bye bye.